Hello students, as we have discussed the characteristics of accounting in our earlier video, today I am going to explain you the uses of accounting, types of account, types of assets and three golden rules of accounting. First I am going to explain you the users of accounting. Basically, there are two types of user. The first one is internal user and the second one is external users. Internal users includes the management, owners and employees. External users are labor, government, suppliers and so on. Now, do you know who is the father of accounting? Yes, Luca Pacioli is the father of accounting and he published the first book on double entry accounting in 1494. Now come to the types of account. There are 5 types of account. The first one is assets, second one is liabilities, third one is equity, fourth one is revenue and the last one is expenses. First I am going to explain you the assets. Assets, it is actually a resource which is owned by a business. Liabilities, exactly what a business owes means it either could be in money, goods or services. Now third one is equity. Equity means the amount of capital invested or owned by the owner of a company. Now revenue, it is the total amount of money which is received from carrying out the business operations like sales. Now the last one is expenses. It is a type of cost that business incur in running their operations. Now types of account. There are basically 7 types of account. The first one is current assets. Second one is non-current assets. Third one is tangible assets. Fourth one is intangible assets. Fifth one is operating assets. Sixth one is non-operating assets. And the last is fictitious assets. First is current assets. Current assets are those assets which can be easily converted into cash. Non-current assets. Non-current assets are those assets which can't be easily converted into cash. Now, tangible assets. Tangible assets are assets that have their physical existence which can be touched or seen. Intangible assets. Intangible assets are the opposites of the tangible asset, means it does not have their physical existence and they can't be touched or seen. Now operating assets. This is the assets which are required for the daily operations of the business. Now non-operating assets. These assets can be generate revenue even when the business not being utilized for daily operations. Now fictitious assets. These realizable value. Now there are 3 golden rules of accounting. The first one is debit the receiver, credit the giver. Second one is debit what comes in, credit what goes out. Third one is debit all expenses and losses, credited all incomes and gains. Now we can write the DR in short form for debit and CR for credit in short form. Now these 3 golden rules of accounting is very important in terms of account or for a business holder. Thank you.